Let's go across now to the management at JK Tyre. Mr. Arun Bajoria is now with us. Sir, you managed to report a better Q2 aided by recovery. Your profit growth that you would be targeting in H2, where do you see volume growth sustaining?
Look, first of all, I'd just like to make a small observation. You've already seen the results, but this has mainly come because of our aggressive cost-cutting measures that we have taken, particularly in the fixed cost. So that is one thing that has taken place, and also because of the the thrust on the working capital reduction, and these are the two major areas. And then, of course, higher sales in the bias, and also because the prices of raw material also were slightly, subdued during this quarter too. So, first of all, these were the main reasons, and the volume that is going to come in the second half, I can only say that right now, all the other sectors, whether it is farm is absolutely thriving, and then passenger car radial has also come back almost nearly to the pre-COVID level, thanks to the reasons of personal transportation and all that. So the demand increased due to the festive season, and also the pickup in the e-commerce, in infra and vehicle carriers. This is going to help us, the tanker sectors. Then the third area that is going to be the import restrictions imposed by the government. Now the government, you have to apply and get the tires, whatever you want to import. So that again is going to help us to fetch larger volumes.
You have mentioned that the company was able to sustainably reduce the cost. Is there more room for improvement so that margins can go up?
Yes, going forward, this is, it may not be sustainable to the level that we have already done reductions, because we have tried to, you see, I would like to explain it another way, that whenever there is a difficulty and an unprecedented one like the one we've seen in the last 6 months, we have tried to find an opportunity. And this reduction, aggressive cost-cutting measures has really led us, and the recovery of JK Tyre, as you can see in Q2, has been mainly because of this very, very aggressive action. And I must say that the entire team, JK Tyre, in all the three categories, JK Tyre, Cavendish, and the JK Tornel Mexico, have worked really hard to come to this level. And going forward, as you said, at least 50% of this, or even slightly more, is going to be sustainable. Because the areas that we have chosen are really those where it always, you see, we have done a lot of work on digitalization. And obviously, when you have great digital platforms in every area that you do work, then there is scope for, rationalization. So that is a very, very major thing that has happened. And then, of course, the volumes, when you increase the volumes, then obviously the fixed cost gets divided on a much larger volume. So that is another area. And then, of course, as I was telling you, that the depth and the reach of our products has improved tremendously. And you see, this rural plus urban, semi-urban, where we call them as Rurban, R-U-R-B-A-N. So this Rurban demand has really come to our rescue, and now we have got the hang of it, and this is going to really take a much bigger shape going forward.
Bajoria, this is Mubina as well joining into the conversation. How has raw material pricing been? Could we expect input prices to increase? How do you see it impacting your margins? If you could just share with us an outlook on margins going forward.
Look, I can only say that nobody has seen beyond December 20 because, this, first of all, this economic recovery due to which all this is happening has to be a sustained recovery. So based on that, up till now, the raw material prices have been definitely subdued. Going forward, I don't see much of a change except maybe on a smaller scale with the natural rubber prices. But then the other overall per ton price of raw material should not be a major factor in impacting our margins going forward. But you have to always look at it, very, very carefully. And nobody can predict the future prices and the future profitability. But we are all working very hard. And so we hope that we will try to produce the best profits and results in Q3 and Q4.
Okay. What sort of export opportunities do you see, Mr. Bajoria, for players like yourself? Do you think there's scope for increasing revenues coming in from exports?
This is a very, very interesting area that you have touched upon. And we have had the highest ever export in a quarter. And the export is almost at about 17 to 18%. And we hope to take it even higher in the coming quarters. And mainly because, as you know, that the sentiment against some of the imported tires from cheaper countries in USA, as well as in Latin American countries, as well as in Europe, is right now, anti those countries which were exporting these tires at a very, very low price. And incidentally, the quality of these tires were not a match of the tires that JK Tyre produces in terms of passenger vehicles and also in terms of commercial vehicles, trucks and buses and so on. So this is continuing, and in fact, there is talk going on that the countries, particularly USA, is going to even put some kind of entry restriction from other countries surrounding China, because there are many manufacturers who have shifted base from their country to these neighboring countries. So therefore, I see a very bright future in terms of increasing our exports going forward.
All right, Mr. Bajoria, it was a pleasure speaking with you. Thank you so much for joining us today on ET. Now, with that, we'll take a very short break. Don't go anywhere.